All right, let's get right into it. There is a $97 billion infrastructure giant, and it's sitting on a massive AI order book. Right now, it's on a collision course with one of the most powerful automatic forces in the entire market. We're talking trillions of dollars in forced institutional buying. We're going to break down exactly what this means.
So, take a look at this number, $15 billion. Now, this isn't some pie-in-the-sky valuation or a revenue projection for 10 years from now. No, this is the actual size of one critical company's order backlog for the physical hardware needed to power the next wave of AI. It's real, tangible demand.
Because behind all the cool software and complex algorithms, there is a monumental physical build-out happening. This is the nuts and bolts industrial side of the AI revolution. And right at the center of it all is a $97 billion giant you've probably never even heard of, a company called Vertiv. They literally build the engine rooms for our digital world.
What's happening right now is this powerful collision. So in this explainer, we're going to hit three key things. First, we'll look at the hidden financial mechanics of the S&P 500. Then, we'll talk about the hard physics that are actually holding back AI's true potential. And finally, we'll look at the one company that sits right at the intersection of both of these massive forces.
So first up, let's talk about a force that moves trillions, the S&P 500. It's not just some list of top companies, okay? It is a financial machine, and it has these powerful, often overlooked consequences for any company that gets that golden ticket to join the club. And this brings us to this really core concept, the S&P 500 index inclusion effect. See, when a company like Vertiv gets added to the index, it isn't just about prestige. Trillions of dollars managed by passive index funds and ETFs are automatically, mechanically, forced to buy its stock. It doesn't matter what the price is, they just have to.
And the scale of this is it's staggering. Over $4.6 trillion in assets directly track this one index. Think about that for a second. It creates this massive, inelastic demand surge for any new company that gets in. It's not even about investors making a choice, it's just a structural requirement of the market itself.
But here's the really crucial point. It goes way beyond just a one-day stock pop. Getting into the S&P 500 is like a fundamental upgrade to a company's entire financial health. Their cost of capital plummets. It becomes dramatically cheaper to borrow money for expansion. It's kind of like having your entire business mortgage refinanced at a rock-bottom rate. Suddenly, you've got all this financial firepower right when you need it the most.
Okay, so let's pivot. Let's go from the abstract world of finance to the hard, unavoidable reality of physics. Because right now, the biggest bottlenecks for the next wave of AI, it's not software, it's heat, a global heat problem. So, why is this such a huge problem? Well, as AI chips, like the ones from NVIDIA, get exponentially more powerful, they generate an incredible amount of heat. So the obvious question is, why can't we just use bigger fans to cool them, like in a normal data center?
The answer comes down to one term, power density. We are talking about so much power being concentrated into such a tiny space. We're talking next-gen systems pushing past 100 kilowatts per rack that air just physically cannot remove the heat fast enough. Traditional air cooling is officially becoming obsolete for high-performance AI.
And this slide, it shows the shift perfectly. On the left, you've got the old world of air cooling. On the right, the new world, high-density, direct-to-chip liquid cooling. This is forcing a massive spending cycle into what the market is calling AI infrastructure stocks, with a huge focus on liquid cooling data center capex. The whole narrative is shifting from software to steel and coolant.
Which brings us to the company right at the heart of this physical transformation, Vertiv. You can think of it like this. If AI is the new brain, Vertiv is building its circulatory and respiratory systems. They are the essential plumbers solving this massive physical barrier.
And the demand for what they do is just exploding. Just look at these numbers. Organic orders are up a staggering 152%. Their book-to-bill ratio is almost 3-to-1, which means new orders are flooding in nearly 3 times faster than they can even ship the product. And of course, there's that massive $15 billion backlog we started with. This is just undeniable momentum.
Now, the really crucial part here is their strategic position. Vertiv isn't just some supplier. They are co-developing the power and cooling architecture for NVIDIA's next-gen platforms. This is about more than just managing today's heat. This is the NVIDIA Blackwell thermal management system and beyond. They are engineering solutions for platforms that don't even exist yet.
Yeah, as their CEO, Giordano Albertazzi, said, they're not just participating in this market, they're actively shaping it. And that quote, it just perfectly captures their proactive leadership role in building out the future of AI infrastructure.
Okay, so let's put it all together. This is where that financial catalyst we talked about at the beginning connects directly with the physical problem we just laid out. And what it creates is a really powerful flywheel effect. So here's how this flywheel works. Step 1. Vertiv gets included in the S&P 500. Step 2. This immediately lowers their cost of debt, giving them access to cheaper capital. So, Step 3. They can use that cheaper money to aggressively finance new manufacturing capacity. To do what? Step 4. Fulfill that enormous $15 billion AI backlog. It becomes a self-reinforcing growth loop.
Now, of course, to have a balanced view, it's really important to acknowledge the risks. The company does trade at a premium valuation, and like any hardware company, they face potential supply chain issues, tariffs, and they have noted some regional softness in Europe and China. But you have to weigh these against the incredibly powerful drivers of AI demand and that big S&P 500 financial catalyst.
So the main thing you should take away from this is the core idea. We are watching a rare strategic collision. You have the mechanical buying pressure from the S&P 500 index inclusion effect, meeting the non-negotiable physical demands of AI infrastructure. And it's all converging on this one single, well-positioned company.
And that really leaves us with a final thought. As this AI revolution just keeps accelerating, consuming amounts of electricity that are going to rival entire nations, the question isn't just who's going to write the code. The real question is, who is going to build the engine rooms of the future?
If you got some value out of this, do me a favor and hit that like button and subscribe to Stock Simplified. We've got more of these visual breakdowns coming your way.
And just a quick but really important reminder, this is for educational purposes only. It is absolutely not financial advice. All the info we talked about today comes straight from the company's public filings. You should always do your own research before making any investment decisions. Thanks again for watching.